Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to walk through Twitter, see what the people are talking about, what they're sharing. It's going to be commodity, stock market, financial related, maybe some wealth building type stuff. So let's dive in. Let's see what people are talking about and go over what is in the news. Again, if you want to follow me, it's at finding_finance and it's finding-value.com if you want to join our community. So looking ahead, we've got API oil and products inventory report. Crude down 2.5, gasoline down 2.8, distillates up a little bit and Cushing up a little bit, with the SPR releasing 1.5 million barrels. So we have a net draw in this, and we'll see how prices react to it. We've got XOP divided by the West Texas Intermediate crude. Oil and gas explorers just adjusted for the oil price. It's been a long time since I posted this chart. The XOP looks really strong versus oil and is currently outperforming it. So when we look at this chart, we've got a massive pullback in oil. This is a downward period generally for oil due to the recovery phase of real estate. We definitely have a basing pattern that lasted from 2020 all the way till about late 2022. And now this ratio is starting to move on up. So the bull market has basically started in 2022 where XOPs outperformed crude oil. And going forward, I think we're going to see an outperformance of crude oil and natural gas equities over West Texas Intermediate crude. This is a ratio chart. Keep that in mind. So downtrend, sideways basing pattern. We've broken the basing pattern to the upside. We've done a little bit of a retest, and now we'll see where we go from here. I am bullish on XOP and a lot of the oil and natural gas equities. Definitely. We've got commodity price changes over the last year. What you want to do is you want to think differently than everyone else. So where do you want to go? Natural gas down 56%, heating oil, lumber, crude oil. This is where I think people should be looking. You want to look at the stuff that's down, not sugar that's up 30%. These will rotate back and forth over time. You're going to have periods where certain commodities outperform, others pull back, and then they'll go back and forth, trading positions of what does best and what does worst over time. And it doesn't mean that what does best will necessarily be the worst, but they will trade back and forth who the leaders are. I think natural gas and crude oil are actually priced very well for someone who is a value investor. 30 to 1 ratio roughly for crude oil, and nat gas is cheap to crude oil, so nat gas is probably one of the cheapest commodities. Uranium, nat gas, platinum are a few. Baltic Dry Index that come to mind. Here's a cool chart. He replied to me. It says, would definitely appear platinum is the better buy on value at the moment. So this is platinum price in the U.S. Home price index. I don't know. I wouldn't necessarily take this 100% like saying that this is overvalued and this is undervalued. I think they're actually both going to go up in price. I think the home price index will remain elevated or slightly go higher, but I think platinum's going to rip it. It's going to rip it. What we see is whenever we get in these expansionary phases of real estate, and this isn't necessarily showing the direct expansion phase, but it is in the late 70s, platinum takes off like a raped ape. Same with the 2000s. We went into an expansion phase in 99, 2000. Platinum took off. And we're entering an expansionary phase of real estate. And I think platinum will take off and probably head towards the upper band of this channel that we've got going on there. It says, ouch, 5.2 megawatts of community solar project in Scottsbluff, Nebraska got clobbered by big hail during storms this past weekend. I actually got a big hailstorm here. Was that about Thursday of last week, and we had some pretty big hail as well. But yeah, solar is subject to hail in a lot of different areas. So your power is now dependent on weather, not just generating the power, but also power can be destroyed through storms. Gold to oil ratio is awfully close to 30 to 1, at which point oil is historically oversold. Historical indicator of oil price strength in the medium term, especially compared to gold. I like this ratio versus oil to USD as it is in real terms. No need to adjust for inflation. This is history. 30 is roughly a buy point or buy signal. That's what I use as a buy signal. You want to load up like hell and then just ride it on down. This one had a double top, little Batman pattern before heading down into the 1990s. This here, you could say expansion phase of real estate, expansion phase of real estate, expansion phase of real estate started in 2000 and it peaked up, or expansion phase of real estate 2000 went all the way down to this low here. Then it came back up. We have an expansion phase of real estate starting, and look where we're at, guys. This is a shoulder, head, shoulder in the ratio, and we're gonna compress all the way back down, I think, to levels down here. We're gonna get a big bull market in crude oil. Gold's gonna go up too. Crude oil's just gonna go up faster. That's my take. Back to the profile. So we've got new homes sales going parabolic, posting a reading at the highest level since February of last year. So here we are going way up. It beat a lot of sales expectations for new home sales. I'm in the camp that when you get low inventory of existing homes, people are going to start buying a bunch of new homes. That is the cycle. It's an expansion phase of real estate. During expansion phases of real estate, what happens are commodity bull markets. Every uranium bull market happened in an expansion phase of real estate. Every oil price advance that has been, I would say, historic by measures, they have mostly occurred under expansionary phases of real estate. The majority, I would say almost all of the large commodity bull market moves where they all go up together have occurred under expansionary phases of real estate. Why? Because the credit in the system expands, and that credit puts everything into a shortage. And the supply side cannot respond fast enough to that credit expansion. And then we overproduce, the credit goes away, and then we get to enjoy a surplus of commodities at low prices for a period of time during a recovery phase of real estate. Choose the gold path, never look back. I just thought this was a cool, deal with all this gold here. Gold looks pretty cool. M2 money supply expanding again. We have kind of a slowdown here from after January of 2022, a little bit of a slowdown. I think that's impacting us now because it takes about 12 to 18 months for that stuff to hit. Maybe we do have a little bit more of a slowdown before we start heading higher, but the M2 money supply is expanding again. It says, wow, what happened to oil, gold, silver, platinum, palladium, copper, natural gas? The war on commodities so Treasury can sell more Treasury notes rages. That's kind of a good observation. Housing says no recession. Consumer says no recession. Employment says no recession. The only thing saying recession is oil. Something will give soon. I agree. Oil is down, and it is weird. But housing, I don't think we've ever seen in history the housing starts go up and we go into recession. I don't think it's ever occurred. So if we continue to see strength in the housing starts, geez, I don't think we're going to see a recession or a slowdown, or I should say a recession. We can see a slowdown. During doing a webinar Thursday with our friends at Atom Data, sneak preview this slide on foreclosures just blows me away. So U.S. total foreclosures filings during or by quarter, and we're still at incredibly low levels for foreclosures. If we go through this gigantic bull market, I think the foreclosures will go up and we'll eventually have a problem with high foreclosures at some point. That will be towards the end of the bull market. It'll be in the hyper supply phase, foreclosures will kick up, and it will all come full circle. That is when I am going to get bearish. KPMG, the housing recession appears to be over as the residential investment component of GDP is no longer expected to be a drag on growth in the second quarter, 1 quarter sooner than initial forecasts. Ferg says the real money to be made in commodity stocks is before there's any data for you guys like you to analyze. Come down to Grady, he says, set by months now, SPX is not a chart in distress, it's a bullish chart. Deflation, rate hikes, recession, second GFC threats, etc. are there, but need to stay with the chart evidence. The secular bull lives. Do not get beaten down by declines. Understand them. This is the SPX, and his opinions are that we could potentially come into this bull shape pattern and move on up. I think it depends on how much inflation we get, and I think it depends on the housing market and all that stuff. We could have an everything rally where everything rallies together, which is possible. He says, very stylish chart with a pink bullish, expanding falling wedges backtest pattern to the yellow trend line, which starts from December 2021 top, which I called here. Then it broke out above blue inverse head and shoulder triangle. Game of Trade says the market is extremely overvalued. S&P 500 index is already 8% higher than what strategists predicted it would be by December 2023. That's the second largest overvaluation since 1999. 99 is a big overvaluation. And again, guys, I just don't think the big upside is in the S&P 500 at this time in the shorter term, like short to midterm, the next decade, which is shorter to midterm. If you think gold and silver are slow at the moment, consider this gold chart priced in Turkish lira. Gold rose 21 times versus Turkish lira last 10 years, 20% this month alone. It will happen to your currency. Have to play this commodities bull right. Your future depends on it. It says this is clear parabolic base. This is no joke. Preparing for what is coming is vital. A parabolic move goes faster and faster upwards. We've got gold here. It says imagine the gains gold will do when we break this 45-year-long golden trend line. A complete return to mean situation. When measuring gold versus U.S. debt, a reevaluation of gold, a reset, 45-year-long downtrend and potential break. So gold did a 6x during this move. We did a 23x during this move, and we're at the trend line all the way back since 1970s and 80. And we could get a big break here. That's going to be a gigantic move and breakout bull market for gold for a very long time. Gold has risen 500% versus GBP the last 16 years. This fourth most traded currency globally is in a losing parabolic move versus gold. A horrible chart. Meet many who are against precious metals, telling them to get their heads straight. So we're seeing what can be expected now, central banks taking turns debasing and currencies taking turns plummeting, eroding purchasing power. Parabolic move in progress, currency purchasing power diminishing rate will accelerate. So guys, we've got these parabolic moves. The stock market can go up in this type of currency debasement if we're seeing these types of currency debasements, but gold and specifically some of the other commodities may outperform. I think platinum outperformed gold during the hyperinflation in Germany, and gold outperformed silver. Kind of interesting to know that. Silver's right up against the blue massive floodgate. Note that the chart already has a clear defined false breakout, so the big picture down move for creating needed volatility before breakout is already done. Soon it will break and go. Just have to be patient, guys. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. You can use the word discount and the coupon code. We do have a 5 p.m. Mountain Standard Time Sunday question and answer session coming up this weekend. We'll see you guys there if you're already subscribers. And that's all I've got for today. We'll catch you later. This is Finding Value.